All right, and we're live. Let me just turn this down. All right, cool. Now, this is the first Wavecast of 2023. And this is going to be the first show to start a series of shows where there is zero technical problems whatsoever. This is going to start a chain of perfection. So, and obviously, I never make any technical mistakes. You guys know that. So I'm going to go into the chat and just make sure you guys can hear me okay. Obviously, you can, because I'm not going to mess up anything technical. But just in case there's things that aren't my fault, go in the chat and let me know you can you can hear me okay. Because nothing can go wrong. Zero technical errors are possible. So there's no one in the chat right now. There's 10 of you here, but no one's saying anything in the chat. Can you hear me? Once I've got this set up completely dialed in, I won't have to do all these testing beforehand. We can just jump straight into it. Hello, Haldor. Welcome to 2023. Who ever thought we'd make it this far? I remember the year 2000. I remember where I was. I was 16 years old in RG1 nightclub in Reading with a bunch of people. And the times are very different. Hey, Paul. Hey, Marcus. Hey, Raphael. Hey, Jew. Hey, Brian. Everyone can hear me. Oh, obviously, you can hear me. Obviously, you can hear me because there's no technical errors whatsoever. So we're going to be going through the. Sorry, I've got the remnants, the tail end of a flu thing that I had over Christmas, like a little tickly cough that just kind of rises its head when I talk. So what are we going to do today on the first Wavecast of 2023? Well, I'll start off by saying I am super confident that this is going to be the year where this whole community takes off, and it takes off not just through marketing and the whole thing like scaling and more people finding out about it, but I mean in terms of you guys succeeding and telling people I've succeeded and it's thanks to this community. So I think this is the year it's all going to turn around. And also, as a student trader, a student crypto trader, all of you have unwittingly started your journey amidst the deepest bear market that the crypto space has ever seen, right? You've joined. To some people, they would say, oh, you've joined at the worst time. But I'm going to argue you've joined at the absolute best time. The absolute best time. Because if you had joined crypto, now some of you have been in crypto for a while, right? So I'm talking to people who kind of just got into crypto and started playing with the markets in the last year. For those of you who have been around a lot longer, then what I'm about to say is going to resonate. If you get into the crypto space, as I did, I got into crypto space in 2016. So I had a whole 2 year, run up until the end of that bull cycle. And when you get into, if you were to get into crypto space in the midst of a bull run, you will be forgiven for thinking that trading is just buying. If the price goes down, then you dollar average in and you just keep buying lower because obviously the price is going to go up again, right? You've heard the strategy, hodl, just hodl, right? Just hold. And in a bull run, it was a perfectly viable strategy. You could just hodl. You could buy at the top of some move and it could go down 50%, but you're like, yeah, but the price is going to go up because at least in my experience, I had never experienced a true deep bear market. Prices came down for a bit, but then they always kept going up. And that's kind of the bad habit that people kind of fell into. And so many people got destroyed in that first major. There was a prior bull run, but a bear market. But the first kind of like mainstream bear market was 2018 to 2020. So many people got wrecked. They got wrecked. They lost like 90% of the portfolio. And they kept buying and buying and buying. And now if they'd have held, unless they were into some really dodgy altcoins, assuming it was like Bitcoin, Ethereum, if they'd have held, then yeah, fine. When price goes up to like, 60,000 or whatever it got to, 65,000, then they're going to be happy. But then they're still holding all the way down to what it is now, it's just popped its head above 20,000 again, then then they're not going to be too bad. But so many people got wrecked. They got wrecked. Why? Because they had developed a trading strategy that only worked in a bull cycle, a trading strategy that required a lot less analytical accuracy, because it was based on a fundamental assumption. And that assumption was that whatever happens, the price is going to keep going up. Now, if you step right back, then you might believe what I believe, in that we're still ultimately in a bull cycle, right? We're still in a much larger bull cycle. And what we've seen all the way up to 2018, that's the first wave. And this is why this move has been such a big move. This is why this correction has been the biggest correction the crypto space has ever seen, because the crypto space began, the first wave completed, and this is the second wave. And the second wave is it's the deepest correction, right? It's the deepest correction. But that still means in a higher degree, we're still in a bull run. So look, if you bought Bitcoin, if you put your life savings in Bitcoin at $65,000, you're going to be feeling pretty shit right now. You would have been feeling pretty shit for the entire year. But in the long run, and this is why one of the best pieces of advice, there's a lot of good advice out there for investing, but one really good piece of advice is never invest more than you can afford to not just lose, but afford to be completely without. Like, I can be without that money for a few years, So anyone investing in any form of cryptocurrency based on the fundamentals, based on the long-term value it's going to create or represent, you have to think about it long-term. If you're like, man, the amount of people that I've come across, or friends of friends, or, and they tell me that they just took out a credit card loan and they bought this thing. And I'm thinking, like, dude, what you do? What happens if the price comes down? He's like, no, but I think it's going to go. It's like, yeah, but what if the price collapses? What are you going to do? And that's exactly what happened. The price collapsed, and he's kind of screwed, because he wasn't thinking long term. He was thinking like a trader without having any trading skills. He was placing a bet on a horse. Now, it's fine to place a bet on a horse if you don't need that money. It's a bet. Betting's fun, right? And if you're betting on something long term, then yeah, you can bet, and you can bet at 65,000. Wait a few years, maybe. Look, I think going back, coming full circle to my point, those of you who got into this this year, you haven't had the opportunity to form any bad habits. There has been zero opportunity to form bad habits, and really, what's being reinforced in you in the last year is that you have to rely on your analysis, and you have to rely on, this is what I've been such a proponent of in this course, you have to rely on your risk management, your risk assessment, your ability to identify trade setups, play those trade setups. It's forced you to trade. It's forced you to trade. It's like, I'm trying to think of an example. Let's say you're learning to fly a plane, and you have to use the instruments, but because you can see kind of where you're going, you might build up a bad habit of, this is anyone who flies probably thinking, what the hell is he talking about? But you don't have to look at the instruments, and so you can sort of look at where you're going. Whereas if you fly at night, you can't see. You're forced to use the instruments. Now, that's not a perfect example, because it's good to be able to see where you're going. In fact, you get a pilot's license seeing where you're going, and to get a nighttime license, it's a different license altogether. But you see what I'm trying to say? In this bear market, you have been forced to learn how to trade. Whereas in a bull cycle, in a big bull cycle, you kind of don't have to learn how to trade, because you can just buy and hold. And there's nothing wrong with buying and holding. And that's kind of what investors do. And you can dollar cost average in. And you can, you heard the meme, buy the dip, just buy the dip, bro, just buy the dip. Yeah. Well, that buy the dip advice hasn't really served anyone this year, has it? Right? Buy the dip, bro. Yeah, I bought the dip, but then it dipped further, and I bought that, and then I ran out of money. I think there's like another meme now where it's like, buy the dip, bro. And it's like, I did. Buy the dip again. I bought that dip too. Buy the dip again. I have no more money. So buy the dip works in a bull market, and it doesn't work in a bear market. If you're shorting, then it would be by the sort of reverse dip, and that kind of strategy would work, assuming it's going to be a deep correction. But my point is that everyone in the space now, getting in the space now, it's actually the best thing you could have done. The best timing. You're in at the absolute best time, not just because it means that you're not going to develop any bad habits. You're forced to learn how to trade properly, but also you're learning as the market goes down. And I know we're here to talk about trading, but when you do start to want to invest, by the time the market does turn around, and it will turn around, you think of the knowledge you're going to have where, the knowledge you might have just started to accumulate at the top of some bull cycle. So if we have experienced wave 1 and this is wave 2, well, what do we know about wave 3, right? So we've got, generational wealth building opportunity ahead of us, right? Does that mean, oh, Andy says start buying now? No, this is not trading advice. This is not investment advice. I'm just saying at some point, this wave 2 is going to complete, and then we're going to get a wave 3. Now, is it bad to start buying Bitcoin now? Absolutely not. I believe in Bitcoin fundamentally long term. I would buy Bitcoin at every price, every dip, keep buying, keep accumulating. That's my personal opinion. It's not trading, not investment advice. But we don't know what's going to happen with this wave 2. There's no law of alternation to look for, right? There's nothing we can look at to see what we're going to get. Is this the end of wave 2 now? Has wave 2 completed? Do we have another push down? I have a feel. We'll go look at the charts in a second, but I do feel we've got another push down. I do think we've got another push down. But is this leg down just the A wave in a flat correction? Are we going to get something more drawn out? So who knows? No one knows. I don't know. You don't know. Anyone who says they know is either lying or delusional, right? All we can do is just look at the charts, keep performing our analysis until we, as traders, this is different than investing, and keep doing so until we find these little pockets of little probabilistic opportunities, which are the trade setups. That's my little rant for this Monday. So I'm going to go in the charts in a second. So I want to announce something that none of you have heard of before. I'm going to be starting a live stream right now. I know this is a live stream, but this live stream is kind of closed within the community, and this live stream is the Wavecast, and it's me just looking at charts and things. But I'm going to be starting I'm going to be starting a live stream, and I'm thinking about calling it King Silver Capital. Not just a live stream; it's like a show. It'll be on Twitch, YouTube, Instagram, TikTok. It'll be like a show, and I'm thinking about calling it King Silver Capital. And then within that live stream, that's where Wavecast will be a kind of a show, a segment within that live stream. So that means that we'd have Bitcoin analysis like I'm doing now. We would do some fundamental analysis and look for some gems to invest in. You guys might suggest, Andy, look at Dogbone coin, and I'm like, all right, let's go look at Dogbone coin. Let's look at it. Let's explore. Let's look at the founders. Let's see who's behind it. Let's that kind of stuff. So there'll be like a gem hunting segment. We can also talk about news within the crypto space, with the big FTX crash. We could have gone live, and like I said, guys, look at what's going on with FTX. And I could have all the articles prepared, look at the headlines, go to Twitter account. So and also look for talk about DeFi and metaverse. So it can be a broad crypto show. That's my idea. And if you guys have any better ideas for what to call it, because obviously it's going to lead into when we start working on the King Silver DeFi platform, then that's going to be a big part of it as well. So that's why I'm thinking call it King Silver Capital. And I think it's going to be a great way to grow the community as well, to bring on in some fresh faces, because every single show I can point them to. By the way, I'm sorry about the coughing. I'm calling the community. You guys are all still the Lions. We're all still King Silver Lions, but I'm calling the community the network. And it's kind of practical because the platform it's built on is called Mighty Networks, and they call the communities networks, right? So kind of how you hear people say like, "Oh, join the Discord. I'll see you in the Discord. Have you seen my message in the Discord?" So it makes sense to say the network. Like, I'll see you in the network. So whenever I talk about the network now, I'm talking about the King Silver community on lions.kingsilver.com. So every show I do, I'm going to bring people more and more people are going to come into there, and we can sort of add some more faces. And the more people, the more people we've got adding value into the community, the more charts that are being shared, the more advice, the more feedback, the more discussion, the better we all are, right? I mean, the most profitable investment in crypto I ever made was it AntShares, or was it, no, it was a project called Zinfin, random project called Zinfin. And I found it in a community. I found it in like this Slack community. It was a premium community, but like someone mentioned it and they said, "Oh, like check this out. I've heard great things," or something. And so I found it in a community. So a community is an opportunity to sort of to crowdsource research. So crowdsource, analysis, but also crowdsource research. Because all it takes is one person to go, "I think I found something really cool. They've just launched, or it's a secret launch, or they've got this pre-sale going on. No one knows about it, but I've researched it." All it takes is one person to find something like that, and then the whole community can benefit. So I benefited from being, in fact, like all of the most profitable investments I've made in crypto were all from someone saying something in a community. Like, these are all like paid private communities, like premium communities. So it wasn't like a big, because those the big public ones, like the big Facebook groups that are free to join, tend to be a bit of a shit show. Like no one knows what the fuck they're talking about. So I was in these premium ones where you had a bunch of people that really knew what they were talking about. And and I think we can build something similar where there's just a ton of value potentially that can arise from the amount of people that can be potentially in that community. And this is why this is what primarily prompted the shift to building the community on Mighty Networks as opposed to Discord, because I've been in Discords where they have like 10,000 people, and I just feel it's unmanageable. I think it's just the way it's structured. It can't really handle that many people, where the community, the network built on Mighty Networks is kind of like your own Facebook. You can structure it how you want, and it is like having your own Facebook. So I hope you guys are liking where it's going. But Raphael says, great idea. So you guys like the sound of that? I think that'll be really fun. I think already, because before I started King Silver Academy, and before that I called it Wave Counters. Before I started that, I was streaming on Twitch. Right, I was streaming on Twitch under the channel name. It was called Wave. No, actually, when I started, the channel was called Kings of Silver. Kings of Silver. That's still my Trading View account, and it was fun. I really enjoyed it. That was when I started that when I was over in Ukraine. I was living in Kharkov, which is the eastern near the eastern border, near Russia. Which is Kharkov's been under a bit of a crazy situation the last year, but that's where I was when I started it, and it was fun. And so I'm looking forward to getting back to that, but in a broader format. So let me guys know what you think about that. If you guys have any ideas for what to put in there, for what to do, I love the idea of bringing on guests, having interviews. Bring on, like Shaman can come in. I know you're watching Shaman. You can come in. We can talk about charts. We can, and I think that'll be really, really fun. So that's just something I'm thinking about. I thought I'd just share that. Pardon me. So let's have a look at let's have a little look at Bitcoin. So I actually wanted to have a fresh look at Bitcoin and potentially change my wave count, but I thought it would be best to just wait for the Wavecast, so I can do it live with you guys. So we're already halfway in, but I'm totally cool going over an hour today, because the hour just kind of flies by. So Murray's waving. Hey Murray, Asfa said it sounds interesting and cool. Yeah, nice one. So let's just jump into TradingView and just kind of see what's going on. Brian says, I like the big picture you gave that we are in wave 2 and about to be in wave 3. I didn't say we're about to be in wave 3. I just said that wave 3 at some point is coming. We don't know. This might be a big drawn out wave 2. This might be the first leg of an extended correction. We don't know. So we don't know when, but that is what I believe. Yeah. I don't know. No one knows, but that is what I believe. So I'm going to share my screen. And look, if I perform the analysis and I'm happy with it, and half an hour's gone, and you guys have no questions or nothing to show me, we'll wrap up on time. But if we need more time, then I'll spend more time. But before I do, let me just close up. I've got other apps open. I want to close them up. Just give my computer as much processing power as possible. So just give me 1 second, guys. And if anyone has any charts they want to show me, if anyone's got any questions about anything at all, and this is really think about this. If you're trying to work something out, if you're doing some analysis, if you do a trade, it doesn't go well, if anything at all, and you're kind of frustrated, save it, screenshot it, put it in a folder, right? And think, all right, I'm going to show that to Andy on the next live stream, because it's a great opportunity to put something in front of me and we can discuss it together. Right, let's close that. Don't need that. Quit. Let's get rid of. I think that'd be fine for now. All right, let's share my screen. When I go to TradingView, by the way, I'm not gonna be able to see the chat anymore. So if somebody's typing something, I'll wait until you've written that, and then I'll put my attention on TradingView. But I'll share my screen first so you can see. That's what I can see. Okay. That's not working. Great. Barry says, what is your view on the sudden rise in Bitcoin since the 11th? Well, the big sudden rise has been, I think, more recent than that. Oh, no, maybe it was the 11th. Yeah, that's what we're going to look at today. That's exactly what we're going to look at today. Raphael says, this volume that pushed Bitcoin up is the same volume that we had in 2021 bull run, but we had 3 trillion in crypto. Sentiment identified that most of the volume is coming from wallets that are holding 1,000 to 10,000 BTC. I don't for 1 second believe this is the start of the bull run. No, I don't believe so too. Yeah, I don't believe so too. So yeah, Barry, that's what we're going to look at today. So we're in TradingView, and let me just zoom out. This is the daily, and the prior wave count, or the wave count that I've got right now, had wave 3 here, had wave 4 here. And then we were experimenting, we were playing with the idea of a ending diagonal, 1, 2, 1, 2, 3. And then we were looking for the 4, really to end around here, and then to come down, give us the 5th, and that'll be a nice ending diagonal to potentially end this wave 2. But then we've all had this surprise move. And I was speaking to a friend of mine, the friend that I was in Tenerife with. And she was saying that she knows somebody who might have potentially, lost half of their project's treasury, which was like millions and millions of dollars, because they had, they're working with an institutional market maker who also didn't anticipate this huge move. So this move took everyone by surprise. But the cool thing about managing your risk, you might have seen me post a couple of trade ideas of short positions. They both got stopped out, and they both were risking like, a maximum of 2% of the account. But, this is another thing. I should mention this at some point in the course later. In the course, you've heard me mention a bunch of times that the maximum exposure of your entire account from any one trade should be no more than 2%, right? You've heard me say that a bunch of times. But that doesn't mean that every trade should be risking, like right up to the edge, should be risking 2%. When you're first starting, until you are confidently, consistently profitable, start with 0.5%, start with 1%. Those of you who will succeed the fastest will be those of you who are the least greedy, the most patient, right? So, and this, we're going to be going through this in a future module. We're going to be giving you a plan that you fill in what this plan is, like in a very, very detailed way, such that when you begin trading for real, you're not risking 2% of your entire account on every trade, because if you're not consistently profitable yet, although 2% is a good, you're protecting your account from trades. If all you do is lose, it's like death by 1,000 cuts, 2%, 2%, 2%, 2%, 2%, 2%. So until you're profitable, like, start by simulating. And then when you do start trading, you want to be risking very small amounts of your entire capital on a particular trade. So start with 0.5% would be my advice. Now, for those of you who are just like so eager, you think, well, but that's going to limit the amount of profits I can make. You've got to be patient, but it's also going to limit the amount of money that you lose, right? So simulated, small amount, and then you can slowly reward yourself with the ability to risk more of your capital up to a maximum of 2% as you succeed after a certain number of months, 3 months, 6 months, whatever it is. Anyway, so yeah, so no one expected this move up, and I didn't. And you even saw on, was it, when did I say it was on a live stream or a live Q&A? I think it was a live Q&A. I was saying I can't see it going up, and it's exactly what it did. And it's because we've got this structure here, which I've seen once before. I forget where we've got this kind of staircase ladder, like a staircase price action, which looks 100% corrective, right? And given that the idea was that we are in a WX at the time, so WX and a Y, it seemed like a good bet that this was the Y wave. But we had this staircase up, and then the third wave just came out of nowhere. And I've only seen this once before, and I think it was either Matic or Cardano. But this is was it this one? No, it wasn't this one. It wasn't Cardano. There's Matic. Let's have a look. It was one of these ones. No, it wasn't Matic. Do you guys remember which one it was? Was it CHC? Chili's? No, it wasn't that. BNB? Yeah, it wasn't. It was one of these ones. I can't remember which one it was. And we had a very similar pattern, which is impossible to identify. Now, the way, like, it's either one of two things. Given this is obviously the third wave, it's one of two. It's one of two things. Either we've got a wave one, and then we've got a very rare upsloping complex correction in the wave two, and then a tiny retrace. That's the upsloping wave two, which is very, very rare, but it can happen. In fact, there's a presentation I saw from Glenn. What's that guy's name? Glenn Neal, I think, the guy I talk about in my course, who has Neo Wave as an extension in his kind of eyes of Elliott Wave, and he talks about this upward sloping wave two in an example, a historic example in I think it was the S&P 500. So that is possible. The other scenario is that we've got this whole thing is a leading diagonal, but that'll be kind of forced, because let me show you this. Here's one I did earlier. My computer's being really slow because I'm live streaming from this computer. In future, when I do live streams, what I'm probably gonna have to do, what I will do, because I did this when I was streaming on Twitch before, is I'll stream from another computer, and then I'll feed the screen on this computer into that computer, and then that will free up TradingView's memory so I can do it without any jerkiness. So what I've got as a possibility, where is it? Am I looking at the wrong chart? No, I'm not. So here is an idea for a leading diagonal where you've got wave 1, 2, 3, 4, and 5, and then a tiny wave 2 here. And as a retrace of a wave 2, that would, God, it's being so jerky. As a retrace of wave 1, let's just grab the top of that perfectly. Almost. There we go. That would be, I don't think that's even going to be 23.6. Oh, yeah, okay. So 23.6 on the nose. Now, can that happen in wave 2? Sure, right? It's very rare because wave two typically is a it's the deep correction. It's the deep correction. And if we look at it from a practical point of view, right? Like what has caused this price action? Well, it's just accumulation. It's buyers coming in and buying and buying, and it's such a huge amount of like accumulation is what happens in corrections, right? A correction is a essentially an accumulation period, and then what follows is then the big move afterwards. So, if you got an upward sloping correction, it would stand that the move that's going to follow it is going to be extended. And that's exactly what we've got. So I'm going to change my idea and say that this is a little wave one, and we've got this upward sloping accumulation phase in the wave two. See, TradingView doesn't even know how to do it because it's not used to an upward sloping wave one, wave two, sorry. So I'm just manually change that there. And then obviously the Fibonacci is going to kind of all sort of not really help us at all, but it is what it is. Okay, and then we've got this huge explosion. Wave 1, 2, and then this is the wave 3. 1, 2, 3, 4, 5, and then that's wave 3. Oh. There we go. And then why is that being funky? Oh yeah, because oops. So because my wave 1 and wave 2 are technically upside down, like the wave 2 is higher than the wave 1, it's messing up everything. It's messing up the other ones. I'm going to just bring this down there, and we can just know that's over there, and then I can there you go. Now these are the right way up. So wave 3, and then pretty obvious triangle, and then the little fifth wave up, tiny fifth wave up to complete the third wave. And now I'm looking for an ABC zigzag right here, the fourth wave. We've got a nice A wave there, nice impulse, 1, 2, 3, 4, 5, and then the beginnings of a correction or the correction, and then I'd be expecting another move down. That's why I've got this little trade marker in place. So that's all fair, that's all well and good, and it's kind of cool as well. If you look, if we back up, we can see. I don't know if you saw one of the wave counts that I posted to the community a while ago, right? So I've got this sliding parallel, and it's the lowest point, right? The low here. I've created a sliding parallel, and I've done a mirrored sliding parallel on the other side of this pitchfork, and price clipped it twice perfectly, which is really, really cool. Very, very cool, right? And what's really cool about that is that those clips have given us upward moving price, but we've got some really beautiful, nice divergence in the volume. And we've also got some divergence in the momentum with the RSI and the MACD histogram. And also behind that, we've got the money flow index. I'm going to talk about that another time. Now, because the sharp move, I was saying this to Shaman, we were on a call earlier today. Given, again, law of alternation, we've got like an upwards moving wave 2. That means we would expect, and it's kind of, a drawn out wave 2 as well. That means we would expect a deep and sharp wave 4. Or if we're wrong, and this is a leading diagonal, then we would expect a deep and that wave, that means that would be wave 2, this little move there. So little and sharp, we would expect deep and long. Either way, I don't believe this is deep enough to be a wave 4 that would work as a law of alternation for this. This is like, we would expect a deep wave 4. So I kind of feel that this is just completing wave 3, and this divergence we're seeing isn't the end of this impulse. It's just the end of this impulse, this third wave impulse. So I'll be expecting a fourth wave. And it kind of, like, think about this, right? This red line here is 20,000. That's what this red line is. This is 20,000. We blasted through 10,000. We have to come back and test 20,000, right? We have to come back and test 20,000. Like I remember exactly where I was when Bitcoin first broke 20,000. Like again, because it hit 20,000, and then that was the beginning of that first bear market. And I remember where we were when price, I think it bounced off 20,000, and it shot back up, and it came back down, and then actually broke down below it, and so it didn't actually stay above 20,000. And I suspect we're going to see the same thing now. So it makes sense that if we're looking for a wave four, we've got this median line where geometry is to me clearly responding to the geometry that this pitchfork represents. So I'm going to draw an energy point right here, because I think that's a very interesting node to keep an eye on. And we've also got a bit. We've got here the is it the modified? I think that's a modified shift. So modified shift, we've got the halfway point here, which also, that's the first warning line. We've got the halfway point that intersects with that point as well. Again, interesting. And we've also got this blue line here, which is a modified shift pitchfork. If I zoom out just to get what that is. So that is, we've got the modified pitchfork that was created. Let's tidy that up. That was created from these points right there, and the first warning line gave us some really nice geometry that price responded to really beautifully, right? And same, the price responded to this geometry really well. We could have created a slot. I'm not going to do this now because we don't really need it, but we could have created a sliding parallel there, and then we could have then mirrored that on the other side of this lower parallel, and we can see price finding resistance at this level. So we can see price responding to this geometry, and you can see down here perfectly, like really, really nicely on this first warning line. So this line is also interesting, and this line also happens to intersect in this point right here, the 20,000. So this is what I'm looking at for the pullback. I'm looking for the pullback to here. Now, could I be wrong? Obviously, obviously, but that's an interesting point that I'll be looking at. So just as a little, and also this is the 200-day moving average. The last time Bitcoin was above the 200-day moving average was back in 2021. It was like December 2021. Sorry, this jerkiness is annoying. 1 second, guys. Okay. This is an Apple Air M1. It's like it's really powerful. It's smooth as butter. But when you're streaming from the same computer that you're using TradingView on, it slows everything down. So look at this. So the last time Bitcoin was above this, and it broke out above this here, right? But the last time it was above it properly was back in May 2021. Now it broke out above it, right? For this final fifth wave here. But that shows you how significant the 200-day moving average is. And this is why a lot of people right now are going to be getting excited and thinking this is the next bull run, because they've seen price break out above the 200-day moving average. Fair enough. But look where the 200-day moving average, look where it's coming to. It's it's gonna be kind of coming up underneath this this energy point. I think it's gonna kind of do, well, it's probably a bit too steep. It's gonna do something like that, right? So it's gonna come down and kind of, I think, I just think price wants to retest the 20,000. It wants to retest 200 DMA. So we can see what happens, but that's something I'm looking to as a point of interest. Now, given that, sorry guys, pardon me. Okay, now I think that I like this wave count zoomed in. I like this as a wave A, B, and C. This to me, with this sharp move, I mean, it feels really strong, like an impulse. It really does, like this is not ideal down here, but okay. We've got I think, a nice impulse. Now, if this is a C, this has to be an A, and this is why I've labeled this as a leading diagonal. And this is why in the course I talk about how leading diagonals are the evil twin of the ending diagonals. I hate leading diagonals because they're impossible to identify as they're unfolding. It's something that you only identify after the fact. So once you identify them after the fact, fair enough, cool, then they can help you with your analysis going forward. But ending diagonals I love because you can identify them in the moment and then you can use them to trade. But if this is an A and this is a B and this is a C, we can see this modified shift, this blue one. I was looking for price to end here, to complete a nice ABC zigzag. And we found some resistance initially, a pullback, and then price just went kaboom. So it's not a typical zigzag correction with an ABC, but it does happen. It's like, it's not uncommon for the C to kind of explode out. And price has come right up to the top here, and I think now that, there's going to be, price is going to come back down, and I believe price is going to come back down, and then we're going to get the final fifth wave up. And if we do that, like, let's say this is the beginning of the impulse down here, and let's say that is the end of the third wave there, and let's say we do come down to here, that would mean that the minimum target for the wave 5 would be the 0.382 level right there. And then the next target would be, the 5 and the 6. And this would be all within the realms of a regular wave 5. And if you look, we're also getting close to the median line. If we go back here, right? We're going, as if we go up for another push up, then are we going to come back to this median line here? That's something that we'll have to keep an eye out for. But I think that there's going to be a lot of people that will, as price comes up, we're going to get some like resistance, and there's going to be a lot of people shorting and using this level here as a stop. We've got obviously this big level here. We've got an exact level here. There's 2 points here. Do we have anything more back here? Well, I've also got this as the monthly point of control, which is really interesting. And I'm going to be talking about this in a later module of the course. But it essentially means like this period here. This is volume profile. This period here shows a month, and it shows a month of volume, and it shows you the price levels where there was the most volume. And the level where there was the most volume is called the point of control. And it's a key level of support and resistance. So we can see price came back up and it touched the point of control perfectly before collapsing back down. So we've got a point of control here. We've got the point where it turned around at the point of control, and we've got another level here where it looks like price is going to turn around and it's going to be at the point of control. So that means there's going to be a lot of people that are going to be probably shorting here. And I think that this last run is going to be potentially institutions gobbling up liquidity from all of the retail traders that will be shorting at that point, perhaps. And if we see a big kind of a spike up, right, a really sharp spike and a really sharp spike back down, I would feel I'd feel quite confident that we're going to get a much bigger move down from that point. But we will see. So anyway, my point I was going to get to was, well, because we've had such a large move up, and potentially I've just said that we might get another move up even higher. But by the way, I'm going to go to the chat quickly and just going to check if you guys are asking me any questions. Barry says no sound. Raphael says can't hear. Oh, no, you can't hear me. Okay. Yeah, well, you can hear me because Shaman just said Glenn nearly. So cool. Okay, I was just checking the chat. No questions. Hey, Karen. How you doing? Sweet. Okay, I'm going to go back into the charts. So when I do live streaming properly, like with this show I'm talking about, I'm going to have multiple screens. I'm going to have like 2 monitors, my laptop, and another screen, and they're going to have like trading view and other things I need to see, and one screen is going to have the chat open so I can see what you're saying all the time. But for now I've got to just go back and forth. Karen says all good, glad to be back and to hear your voice. Yeah, but I keep coughing. I've got like a little tickly cough the tail end of the Christmas flu that me and a ton of other people got. So the hour's up, but I'm gonna carry on for another half an hour. We'll see how we get on. Barry's writing something. I'm gonna just wait to see what you're gonna write, Barry, before I dive back into TradingView. Pardon me. In fact, there's a bottle of water right there. Let me just go and grab that. I'll let Barry finish up what he's typing. There we go. Martin, hello Andy. I've been away from the course for quite a while, but glad to be back. Welcome back, Martin. Well, you know, a fresh new year. Resolutions for the year. I don't do resolutions. I just make plans my entire all the time. So the new year doesn't mean anything. I'm always making goals and achieve, you know, like what I might want to achieve this week, this month. Like the fact it happens to be January the 1st means nothing to me. I think resolutions are people who haven't followed through on their plans the prior year, and they're like, right, this year I'm going to do this. But resolutions, I think, are really bad because someone just lists so many things they want to achieve, and that's just not something that's kind of practical. You go, right, what do I want to achieve? What's possible in a year? And then you can then break down each goal, you know, into its components, and then you can create a plan and all that kind of stuff. Barry says, if you draw a resistance line above the price, where it is now across the previous dip, then could that be the resistance we're expecting before the fourth wave correction? Let me just see what you mean. Let's go to a time frame. So you say if you draw a line above the price where it is now across to the previous dip. What do you mean? What do you mean the previous dip? I don't know what you mean. Like this is a dip. This is a dip. If you draw a horizontal line, you said where price is now. Well, price is right here. Let's change the color of that. So what dip are you talking about, Barry? I don't know what you mean. The start of previous dip, November the 15th. November the 15th. Oh, November. Yeah, that's November the 15th here. What do you mean? I mean, do you mean this? But this started on November the 5th. Is that what you mean, Barry? I assume that's what you mean. I'll come back to you in a second. I mean, you know, you've heard the thing, support becomes resistance. Resistance becomes support, but price hasn't broken out above this level yet. If and when price breaks out above the level, then, you know, long traders would look to this for support after having broken out of it. And this also, as I mentioned, is the point of control for, there we go, that month right there. So, and price did bounce off that point of control, found resistance at that level really, really nicely, and we found the exact same thing here. So in fact, I can even extend that outwards. Oh, I can even extend this one outwards here. What's that one doing? Just sort of hanging around. Yeah, we don't need that. Yeah, so I can extend that one out, and so we've got this monthly point of control for the month of August of 2022. So Barry says resistance and the end of bull run where you have drawn the green resistance line. Green resistance line. You mean the line I just drew? Yeah, that's what. That's what I mean. So yeah, so yes, that it is and has acted as resistance, right? I mean, you've said the resistance we are expecting before the fourth wave, but I think that was the resistance. But look, we'll see what happens. Price seems to be. Let's have a look. Price looks to be climbing up quite nicely. Quite interesting. That's prime. Looking at the volume compared to this, seeing what's happening here, I still think that looks corrective. So that's the point that we would not want to, for this particular wave count, we wouldn't want to break past that level right there. Otherwise, that would mean that we've that this third wave isn't over yet, and we've got something different going on than what I've got. But it's looking like it. It's looking like it wants to punch through. That's an unusually deep wave two. Now, wave two can retrace to 100% and still be valid, but it's very unusual to get a wave two that goes this deep. But it does still feel corrective, even though we've got a strong move there. We also had a strong move here. So far, we don't have more volume than we saw here, but look how close it is. You can see in this trade setup, the short was just above this level here, just because that is what would invalidate this particular wave count. Now, this is obviously like a little move here, just like these like little trade setups. And our point of control, what price was the point of control? It was 21,429. 21,429. So 21,429. Yeah, so it's funny, like it's exactly where price stopped, right? Exactly where price stopped. We've got this point of control. So because we've got the point of control, I think it would be safe. Now, I would advise people never move your stop losses after you've created them. But because this point of control, I'm going to move this up to just there, because that then keeps it's a 3-to-1 reward to risk ratio. So even if there's a chance price might pop through this, I want to give it a little bit of room to breathe. But anyway, so I kind of expect it's gonna pop through. But there's this sliding parallel as well, which price seems to be liking. Look at that volume. There's more volume coming in. It's now equal volume. So yeah. Anyway, so let's go back to what I want to do. I want to relook at this wave count. So if price is going to do what I suggested today, where we're going to get another move upwards, right? And whether it's to this median line or just another push up, it kind of ruins this wave 1, 2, 3, 4, 5 idea, right? It ruins the ending diagonal idea. So okay. So I'm just going to walk you through my thinking process of making sense of this. I'm going to pop back in the chat quickly before I dive in. Jeffrey says, hey, Andy, if the price goes higher and is greater than 100% fib, then could we be looking at a similar to wave 2, a WXY? I don't know what you mean. The price goes higher is greater than 100% fib of what? Do you mean like when I was zoomed in a second ago over here? Is that what you mean? Because 100%. is like that's 100%, you know, of this level. You're saying if price breaks above this, is this fourth wave correction likely to be a WXY? Is that what you're asking me, Jeffrey? 100% of the minor wave 2. 100% of the minor wave 2. Oh, here. Oh, I see what you're saying. Yeah. Okay, sorry. So WXY. Okay. Well, let's look at it. Let's explore. I can't just say right now this is what I think it is, because that's not the logic train. It's like you start off, that might be a hypothesis, and then you explore it. But it's only at the end of the exploration and testing process that you would arrive at like a conclusion's a strong word, but you know, an analysis, a wave count that you think is the most probable explanation for what's happening with price. So that's the first thing I always do. Let's zoom right out to the daily, right? Let's have a look at the daily. It's a bit frustrating with the jerkiness of this, so I am going to have to get a second computer set up for when I do the get onto the live streams properly, so it frees up this computer. So first thing I'm going to do is just take away all of my pitchforks on my wave count, just have a look at price action and just look at it naked, so to speak, and just get a feel for the price action. And just going to absorb it for a second. Impulse. Let's look at the volume. Third, fifth of third. Could this all be a fourth wave, the whole thing? Like we're still in the fourth wave? That, you know, it's a possibility. It's a possibility. But I don't think this is an ending diagonal anymore. I don't. So this is obviously corrective. There's no arguing with that. But what does it mean? There is an argument of saying that could be impulsive. But what does that mean? A, B, C, A, B, C. No, don't think so either. Could this be a W, X, and a Y? And this is the fifth wave? I mean, there's an argument for that. Fourth wave, A, B, C, because it has qualities of an impulse. A, B, C. And then that would mark the fifth wave. That would mark A, B. No, sorry, I'm getting confused. What am I talking about? I'm sorry. I'm getting confused. I'm doing a correction upside down. My bad. W, X, Y, and then the fifth wave. Sure. But if we look at the size of the third wave, we've got 1, 2, all of this is 3. Is that really just the fifth right there? Is that it? Well, we can do a trib-based extension. I'm sure I've done this before in the past. Let's grab that. It's so jerky. That the minimum target, as in high probability target for the wave 5, would be further down. It would be around that 13,500 price level, and then the 0.5% would be about around the 10,000. So this would be a very shallow wave 5. Let's get the 2.236. Oh, sorry, what am I talking about? That's wrong. 0.236. Yeah, and that's way up here, up there, and that's not really helping us either. So, you know, according to our wave count, we should be expecting move down here. So, pardon me. So that isn't helping us. Let me pop back to the chat, see if anyone said anything. Jeffrey says, I agree that we are in an ending. You agree that we are in an ending diagonal? Well, I haven't said that. I'm saying I think we might not be. I have the current price. I have the current price to be the W in the minor wave 4. I have the current price to be in the W in the minor wave 4. The W. Okay, so W, and then you'd be expecting an X and then a Y. So you think this is the first leg of a W, X, and a Y. Sure, right? Yeah, maybe. We never know if a correction is going to extend like that until it happens. But that doesn't explain in the macro what's going on. Because this isn't the 4 of like 1, 2, 3, and then some deep 4. That makes no sense. So this isn't the 4 of that. If you mean, because that's the minor degree, if you mean the intermediate degree, that this is all a W, I mean, that would be, the W would have to come up to here, because that would have to be a running flat W or an expanded flat W. So the W would have to come all the way to, well, up to this level up here. And if we got a trib-based, if that's what we saw, for example, if price came down here, then it would be looking at these kind of levels. And would that count potentially as a well, this would be an A, a B, and a C. And you're saying that could be the W of the 4th. Well, yeah, that could also be the 4th itself, right? That could be like a running flat for the 4th. Or if it goes even higher and it continues on, it could be a expanding flat. But that has sparked an idea, though, because I wonder if this could be, because what's interesting, what's really, really interesting is, do you know what, this we could be seeing a running flat here. But hear me out. Hopefully by now, that the first wave in a running flat, expanding flat, and a flat is a corrective wave, right? We've got a corrective wave. This could this could be argued quite nicely is an A, B, C, right? In fact, this modified shift in the purple, right? This is a modified shift. Well, as you know, I'm not going to anchor this, but you can just see really quickly, right? A modified shift is a channel, and corrective and channels tend to correct, and so this would and you see price pinged the bottom of this channel, the lower parallel, perfectly, and so this is a beautiful, just on its own, a beautiful correction. So that would mean we've got a correction here, a beautiful correction here in a potential B wave. And if you've got an A, B, C, what follows? Well, sorry, if you've got an A, B, what follows? The C. What is a C? Impulsive. What are we seeing? An impulse. And in fact, is this an A, B, C, or, well, it can't be. If we're looking for a C wave, then it's got to be an impulse. If this was a W, an X, and a Y so kind of a flat, but in a double, in a double combo structure, then yeah, this would be an ABC. But look what price is doing. You know, I said it's kind of annoying that price is broken out of this corrective structure. Sorry, the what they hear like a modified shift, but it's a channel, right? Correction center channel. But look what, if we think about this as a base channel, if we think about this as a base channel, then we've got a wave 1, a wave 2, and then a beautiful wave 3 out of the base channel, and then we're looking for the retest. And it might even, like, I've got the energy point here, which is coming close to the base channel, so it's got an impulsive structure. So I wonder, which means that point right there is also a very interesting, right there, right, where the lower parallel meets the upper parallel, which is of the potential base channel. Now, I like this. I really like this. I really, really like this. The only kink in our armor is we've got this A wave. Well, I've got it as an A wave is impulsive anyway, so I've already decided this is an impulse, haven't I? Yeah, I've decided that's a leading diagonal. So here we are, ladies and gentlemen. So right before your eyes, I'm making a fairly simple change. This is wave 1. This is wave 2. This is wave 3. We're anticipating a wave 4. And then we're going to get our 5th wave up. And that 5th wave is going to complete our C wave. So I've got to do that C wave. So we've got the minor. Let's draw then the ABC flats. So we've got the A, the B, and then the C up there. Minor, minute, good, okay. And then below minute, we've got minuet, and that should be green. Wait, that's not right. So I'm losing my religion. That means that's going to be an ABC. Let's get rid of those now. We want another ABC down here, there, and there, and that needs to be below this, which is minuet, and that's where we get that nice color there. And now I would need to, there we go. Good. 5, 3. Okay, no, I've got this wrong. This should be one more up. That's the, yeah, that's it. That's the minor. Okay, that's better. So that means that that should be minute. Okay, that makes sense. There we are. A, B, C, B, C there. And that means that this degree is one below that, which is minute. Minute, minor, intermediate. We're good. Okay. So that means, so this wave count means we're expecting that further push up. And that would give us a very interesting flat correction. And it's going to trap a lot of people. If this happens, it's going to trap a lot of people in thinking this is the new bull market now, because that's how, you know, the impulse of a C wave is impulsive, and it tricks people into thinking price is it has changed direction. So how would this be invalidated? Well, it's kind of tricky because you can get an expanding ending diagonal as well, right? And the expanding triangle would typically expand the same length as it does with the B wave. So just to do this really crudely, it would be something like that, approximately above here. So it would take us up to this the upper parallel potentially. If it started to climb up higher than that, I would then start to think, you know what, I think this might be the beginning of the bull run. But given the structure with wave 1, wave 2, wave 3, in fact, I'm going to get rid of these warning lines just to make it really, in fact, because the degree of this impulsive wave is white, I'm going to change this to white so we can see, okay, that's a base channel. And then now we're looking for wave 4, either to, I think I said identified that right there as a really interesting energy point. What this means, however, is if we've got, this is quite a sharp wave 2. So this energy point is looking a lot more interesting to me because we've got a sharp wave 2. And so the law of alternation would want us to expect a more shallow, a more drawn out, and this is a deep wave 2 as well. So we'd be expecting a drawn out sideways wave 2, which is interesting because it's within this point of control supply zone, right? Which is a monthly point of control between June. The point of control was here and all the volume was here, and the same thing, point of control up here in August, a lot of the volume. So this area of volume, prior historic volume, this wave count would anticipate we're going to be chopping around within that area before we get another push up. And if we do get that other push up, we might even, again, this is all hypothesis. What I'm doing is I'm hypothesizing ideas. But thank you to Jeffrey for, was it Jeffrey or Raphael? Yeah, Jeffrey, for kind of giving me that idea. This is the cool thing about doing it together. Raphael says that volume on B is massive again. 50-minute candle chart. Where are we going? I've only got the half an hour and the 5 minutes. So the half an hour. Yeah, but look at this wick. This is called a rejection wick, right? Now it's not this is like a really huge rejection wick. That's like price just being brought right back down. So yeah, volume has increased, right? So we've got like some like opposite divergence in price. Let's look at the momentum. Yeah, we've got the RSI is just higher as well. MACD, we're not getting a divergence on the MACD. It's kind of the same MACD. So yeah, so I mean, we'll see what happens. But this wick up, correction, move up, like this feels corrective. So far, 1, 2, 3, 4, 5 impulse down. This white channel is the base channel for this little move. And then we've got this, what feels like a very deep correction up, but we haven't got a divergence. So, this is like, we haven't got any confluence, but price has been pushed down a bit, but, we'll see. So this is looking very interesting. I'm really liking this. Do you know what? So this is now my primary. I'm going to get rid of that. This is now my primary wave count. That we're looking at an A, B, and a C. Are there other potentials? Yeah, of course. But given this impulse after such a corrective structure, there's only 2 explanations. And one is that this was the entire 5th wave of this move down, of this C wave. It just feels too small for me. It feels too small. Could be wrong. I could be wrong. I think we did have an extended wave 3. So but it would mean kind of an unusual A, B, C, or sorry, a WXY structure, an unusual corrective shape if that was the 4 ending there and that was the 5. So this to me feels quite nice. An A, a B, and then we've got a nice explosive C, and it's the first bullish impulse we've had in ages, which explains the not like get people just like losing their minds, getting really excited. So I feel I'll be vindicated if we get another push up. It's just like I think it might be just the completion of this wave 3. But if we do get like a sideways movement for really like the next few weeks, well, no, actually the next month, really, if we get a sideways movement for the next few weeks, 2 weeks, 3 weeks, then I'll be thinking, do you know what? Yes, I think we've got another move up in the 5th wave, and then if this wave count is correct, that's when we're going to have the beginning of the end of the world. That's going to be the beginning of the 5th wave down. If this broader wave count is correct, and that's going to be quite interesting to watch, because that's when everyone's going to freak out and more platforms are going to go bankrupt and in the news, crypto is dead and blah 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 blah. But overall in the macro, I just feel like we haven't had the death spiral, the capitulation that would mark the end of the greatest bear cycle in cryptocurrency history. If this was it, if this was the last move down in the entire bear market, it just, I don't know, we haven't got a huge rejection, and I would expect more of a spike, but I could be wrong. So let's go back into the chat and see what you are saying. Jeffrey is giving me a chart to look at, Raphael, but that would mean that it would move down from here. But that would mean it would move down from here. What do you mean? If I'm expecting a 4th wave, because the second wave, if this wave count is correct, the second wave was sharp and deep. And so law of alternation will tell us that this 4th wave, we'd be expecting something shallow and longer in duration, whether it's to this point here, or, wherever, right? We'd be expecting something longer in duration and shallow. And then we'd be expecting a last move up in this 5th wave to complete the C of the 4. And then after the 4, that's when we would expect the 5th wave down, right? Hopefully that's clear. Yeah, makes sense, Raphael? I'm clicking on your chart, Jeffrey, to see what you've done. All right, so Jeffrey, I'm gonna get your chart up. In order to get your chart up, I've got to go over to my I've got to click on something in it's called OBS, my broadcast software, so I can go over to my Brave browser. But it's going to look funky for a second, right? It's going to look really funky. So boom, there we go. So this is your chart, Jeffrey. See, now I can't see what you're writing in the chat. So I'm going to have to keep coming back to TradingView afterwards. So let's see what you've got. Wave 3, 4, 1, 2, 3. Oh, I see what you're doing. Yeah, W, and then yeah. So you're looking at the W, and then an X. But look at that Y. That Y. Why would you anticipate such a tiny little Y? Typically, with a correction, you've got W, and then you can get a very deep X, but then you'd expect the Y to be, it would still take you in a direction for that to be true. It would take you. It would not look like an ending diagonal, right? Yeah, it wouldn't look like an ending diagonal. Now, could it be possible? Yeah, maybe we might get a little Y. Could get a B, C, D, E triangle, in the 4th wave position. That could happen as well, right? This could be an A, B, C, D, E, and then you might get a triangle shape. That's a possibility, but this wouldn't be my primary, because you're you're forcing this. This is not a typical corrective pattern with a little Y. So because of that, it wouldn't be my primary assumption, because you've got to be careful of falling in love with your analysis, right? you spend a lot of time on analysis, and when price action does something different, you kind of want it to still be valid, and so you try and find ways to well, price action could do this, and then it will still be valid. But you got to be careful, right? You got to be careful because you might be falling in love with your analysis, and you've got to be willing to just discard it immediately. There's that I think it's a Buddhist ritual that they do. It's in Tibet or somewhere, where they spend ages carefully placing like grains of sand into a beautiful mandala piece of art. Takes them ages to do. It looks gorgeous, all the colors, right? Maybe you've seen that on TV, on a documentary. And as soon as it's done, they admire it for a second, and then they sweep it all up. And the whole thing is a meditative practice of surrender, of not holding on, not clinging to anything, not clinging to reality. They spend so long producing this thing that's beautiful. They admire it for a second, and then they sweep it all away. So you've got to have the same approach to your analysis. You put together these beautiful looking charts, and then when price action does something where an alternative is now more probable, you've got to sweep it away. Now you can make them invisible, put them in a folder in your object tree, make it invisible, then start the new count, because it might come into practice later. It might be useful later. But you've got to get into that mindset of not clinging, not holding on to your beautiful art that you've created in TradingView. Shaman says the next new moon. Shaman, you're the shaman. You're our moon shaman. The next new moon is on January the 21st. It'll be interesting to see if price reacts to it. New moons are usually accompanied by drops in price, and full moons are usually accompanied by rise in price. So the January 21st. January the 21st. So that's not very far away. That's literally a few days away. So I mean that, a little drop to the fourth wave, perhaps, maybe. Yeah, I mean, we'll see. We will see. Right, I've been going for an hour and a half. I think that's enough time. Unless you guys have more questions. sorry for all the coughing. I'm feeling so much better than I was over Christmas. I was just, for like 3 weeks, I was just in bed and coughing and telling family members to stay away from me. I only cough when I talk. If I don't talk, then this coughing doesn't happen. So I'm kind of like surprised. I haven't been talking today. Let me bring up my beautiful face. There we go. Okay. Shaman says it's not always accurate, but an interesting indicator to keep track of. Yeah. So definitely keep it in your chart, Shaman. I used to play with it, but I don't really use it, not really. So awesome session. Yeah, thanks, Shaman. In future episodes of this idea, I've got this King Silver Capital idea. I'm going to bring you on, Shaman. We can discuss charts and shoot the shit. So I want everyone watching this to go into the chat if you're not there already, and I want you to post an emoji which best expresses how you feel about 2023, how you feel about 2023, what your hopes, aspirations, expectations of your 2023 are going to be. I want that expressed in a single emoji. Pardon me. You're welcome, Raphael. Raphael, such a badass name. You should find some friends. Raphael, Donatello, Michelangelo, form a gang, right? Form a crew, and each of you should specialize in a with a particular weapon, right? You've got the what they call those ninja forks. That's what you've got to focus on. Your friend Leonardo, he's going to be the guy with the swords. Donatello, unfortunately, just gets a stick. And Michelangelo gets nunchucks. And you need to find a wise old rat to lead your gang, tell you where to go. I've even never heard that joke before. I'm hilarious, I know. I'm so fucking hilarious. Okay, Karen thinks this year is going to be one massive party for her. Jan's thinking about money. Raphael is thinking about money. Barry says, great presentation, Andy. Thank you. Take something for that cold. It's not, I feel fine. It's just a tickly cough. I think there's nothing you can do about it. Maybe some honey and lemon or something, but I feel great. It's just a little, a little tickly cough when I talk. Yeah, oh, there we go. You've actually said hot lemon and honey, please, sir. And then you've got two emojis for 2023. Zifa is just happy in general. Marcus is thinking of the money. Shaman's thinking about that price chart on the way up. Tony is feeling just great. Esther, thanks for a great presentation, a great session, Andy. We appreciate your dedication, commitment, and sacrifices. Good night. Yeah, thank you, Esther. I appreciate that. Tony says, absolutely fantastic, Andy. Super useful. Thank you. You're welcome. And you give me the old AOK sign, and Jeffrey is also very happy. So, all right, I've got enough smileys, I think, from a bunch of you. I'm happy with that. I'm content. So, sorry. So it's been a good session. Let's wrap it up before I die. Oh, and yeah, so I don't know what's going to come first. I don't know whether the next Wavecast is going to come first or the beginning of that show I talked about. Probably the Wavecast next Monday. I think this is going to take longer to get ready and prepare for. And I've also got to be working on the next module as well. So, which for those of you who are in-house lions, it is coming soon. It's going to be a little bit late. There's just well, there's a lot to get through. Pardon me. Let's wrap it up there. Thanks for being with me, ladies and gentlemen, guys and girls. I hope this has helped you. And as normal, I will be in the community with questions, what kind of stuff. So I'll see you guys later.